Hello traders. Yesterday, after 2 months of trying, I passed the Alpha Group Trading Challenge with 21 days. So for phase one, it took me around like 8 days. Phase two, same, similar kind of situation. Uh, I think bit less, probably 6 days, 6 working days. So what I've learned, so I just want to share with you guys what I've learned going through this challenge, because I thought it was pretty easy because I have quite a lot of experience. I teach trading as well, and I trade. So I thought it would be very easy. But what I see in trading, when I go for a certain parameter you have to follow. Suppose you have a 5% daily loss, and you have like 10 to 8% uh, maximum loss in phase one, and phase two you have 5% maximum, 5% profit target, and maximum loss is same 10%. So what I find is very difficult is to actually keep in track, because if you have your own capital, so you don't need to track how what's your person loss today, and you are below 5% or 6% or 4.5%. You don't need to exactly keep in track of those. That's why I actually um, got my first challenge. I won the phase one pretty easily. Second choice, I was almost up 4,600 bucks, and I was in a trade, GBP and then all of a sudden news came in and crashed the market, and it hit my daily uh, loss, like, which was $5,000, and I was up. So this was like, because I was in two trades, both of them went in opposite direction and hit my daily loss. So what I learned, like, trading this kind of prop firm, uh, any prop firm you're talking about will have the same similar kind of criteria nowadays. So mostly 10% maximum loss and 5% daily loss. So this is the hard thing for trading, when you go for this kind of funded trader. So I already passed this to, I've been, I haven't got the account yet because it takes 2 days to verify this. I don't know why. Shouldn't be that long, but I passed it day before yesterday. So probably I should get an email by today or by Monday. So what I've learned, the first thing that what I did is, on the second challenge, what I did, so I always keep on open in one page of their website, where the trading parameters and all this stuff was showing all the time, so I don't forget what my drawdown is and what's my target. I needed everything, every metrics, and I should keep my, I know if I even have a losing day and then lose 4%, it's nothing. 4% is like 100K account is $4,000, which is in reality, if you have trading a $10,000 account, which is 400 bucks. So in that circumstance, it doesn't feel that much. But if you go for 100 grand, it's just 4 grand, and that clicks that you already reach 4% drawdown. So this is one thing I do. So I keep a page open, their page open, so keep a track on my steps. And what I learned, that to follow your strategy, uh, it is a bit difficult when you trade with the parameters, news, and all these things, because when you have your own capital, I guess it It gives you a sense of discipline when you trade with certain parameters in your mind. And most of the traders like us, probably we don't have 100 grand in capital. So, well, like, I guess some people might have a couple of $100, so they don't care about 4%. They care, because if you have $500 or 1 grand in your account, you can't just trade with 5% daily drawdown. That you're probably better off not trading. Because you're not going to make anything. So obviously you have to go for 10 to 20% drawdown for a trade base. But since you are trading other people's capital, you have to keep in, like, all the time in your head that you are in a certain parameters that you have to follow by their rules and stuff. So when I start my real account, see, I have to be more cautious about this, because it took me like almost 2 months to pass, because I failed this first challenge in the second phase, and this challenge, it took me almost 21 days. So like almost 2 months it took me. 2 months is quite a lot of time for me. It's quite an effort too. So I don't want to lose that quickly. So for the new traders who will watch this video, hopefully if you watch this video, you learn the certain things that I follow in my trading. Definitely I have a trading plan. Otherwise I wouldn't pass 15% of the account in 21 days. So it's quite a lot of return. But the thing is, you have to understand that this to have a trading plan and following the trading plan is a completely different thing. But if you don't have a trading plan, obviously there is no way you can follow a plan, because we don't have a plan. So first thing, you have to have a plan, and then you have to make sure you're following the plan. So I made a plan. I had a plan back in my head, but I'm writing it down just to make sure that I can see it visually. It's in front of me, which is not a very elaborate plan, just to write down my actual the way of trading and my thorough understanding of the market that I'm trading that at the moment. Second thing is the risk management. It's part of the trading plan, obviously. And the thing that I did in the first challenge, this I didn't think about that. If the market crashes or any news event comes in, what would happen, how much I would lose or anything. I was like pretty sure that we're gonna go in my direction, because there was a huge support. But the thing is that it came through the support. It took my daily daily limit, and then it went up. So I was right in that sense. But who will listen to you that you were right or wrong? There's nothing you can gain by saying that you're right, that it went your direction. But that's not the point. Its point is, are you willing to follow your plan? Are you willing to take the risk that it's supposed to take, right? What I also learned, that you shouldn't be, I see that 5% daily loss. I think if you have a mental prep for 2.5% daily loss, that will be the best for you. Then you have, like, almost half of your you are in the safe side in most cases, because 2.5% risk per trade is pretty safe, I guess. But in case if you don't put a stop loss, in that case probably not. So you better put a stop loss to see if any kind of flash crash or news event, you don't know, Twitter or anything could happen. So There was a news release, even though the second phase, but I wasn't sure that we're gonna create that much of a spike. But GBP, JPY, sometimes it could happen. It's very volatile, but things happen. So I learned my lesson from the first challenge, and second challenge was pretty straightforward. Um, in, and I don't take actually huge lots, so I was trading only 5 lots. Um, but the thing is, I had 2 trades on. And 5 lots is, I see in YouTube that some traders actually trade 30 lots, which is huge. I wouldn't even consider um, trading, never consider 30 lots in trading in 100K account. So yeah, I think it's like way too much of my risk appetite. But 5 lots still I couldn't, my account couldn't hold, like 5 grand. It just gone like straight. 5 grand, sorry, 5 lot and 5 lots, so 10. So 10, just 5 grand gone like blink of your eyes. It 5 grand is nothing for your 10, 10 lots for GBP JPY. So if you have 30 lots, I guess that would no chance of holding your account for 5% daily stop limit. So you have to follow your risk management. So it's just don't take too much risk in one single trade. And if you, second thing I, I learned that was, even though I have quite a lot of experience in trading, and I teach people as well, but still I consider myself a student of anyone teaching anything over the internet, on YouTube or whatever videos. I watch what they're saying. If I can learn a little bit to improve my trading, you never know. Some people might have their own thought process, just that could help me or help you. So you should consider anyone who is obviously not a really novice trader at come up with anything good, but I'm saying that with experienced traders, they might have some insight of in trading that they might know that you don't know, and that could actually trigger your edge. There should be an edge. So a new trader should probably, they don't know the edge and they are looking for the edge, but some probably find the edge. I don't know they were going to share it or not, but someone might share it and it could help you. So be a consistent reader, read all the time, watch, but don't change your trading plan very frequently by watching the videos and stuff, because back in your head you need to just improve your strategy, not completely swap the strategy for something new. And another thing I learned, like cutting loss quicker, like as you understand that it's a very old concept that let your winner run and cut your loss short. So what I learned that this is the best way. This is hard for the beginners, I guess, because losing any trade is not that easy, because even though phase 1 and phase 2, whatever challenge, how much money you pay for the challenge, that's not the main thing, but it comes in your head. Even for a I guess for a demo trade, to lose a single trade, it just go against your ego. Like, I guess that's the human beings are created. Like, we are very much egocentric people. Some people have more ego, some people have less. But I guess if you don't have that kind of ego, it's probably much easier for you to trade to begin with. Or if you are already a pro trader, probably you already know this. I don't need to tell you that. But I think the cutting loss short, according to your plan, it is important. But cutting loss it doesn't mean that you, suppose you trade breakout and retest strategy, right? So if the trade in, I guess what time frame, it depends on that. Suppose 15-minute time frame, if the candle doesn't close on top of your support, and you think that it is going in your direction, and then you buy, and the candle close actually below the support. So that's not, that you have to wait for the candle to close. It will not gonna help you any way or form then to so you have to keep it open. The trade need to be open until you see the trade candle close. And if it close below your support or resistance, so that's what I'm saying. So you have to make sure that you're not cutting loss, mean you have a mental stop loss and you cut your loss short. But you have to have a certain understanding of the market. Okay, if it doesn't happen like this, then I'll cut the stop straight away. No hesitation, nothing. No one will gonna stopping this trade. So you stop it straight away because it going your direction. So the direction wise is completely changed. So you buy or you sell not gonna be a valid trade anymore. That's what I'm saying. So you need to have a certain understanding of the market to see this kind of thing. You just not cut a stop, your stop for nothing. You can cut it for your number of pips or number of percent loss or win. You can say that could happen, but I'm saying there had to be a logical understanding of technical analysis to actually go through this, so you don't keep on closing your trade for nothing, no reason, and at the end of the day, this same trade goes in your favor. You understand? So other thing that I learned quickly is that understanding the technical analysis. Whatever you people say that fair value gap, mean value, whatever they said, probably they would understand that, but you have to understand that if it makes sense to them, it might not make sense to you. And if it doesn't make a sense in your trading, don't follow it. I find that this fair value gap, which is very much in internet hype, I guess, ICT concept or SMC. These are pretty much the hype. I don't think they work as they claim. What I see that real trading is actually the basic support and resistance. That's the main thing. And trading on the higher time frame and coming to a multiple time frame to understand the pairs. Suppose if you trade GBP, JPY, you have to understand that there is two elements in trading, right? Suppose GBP and JPY. So GBP USD, if the GBP is not strong, and so your GBP JPY pair might not gonna move as much as USD JPY is moving. So you have to understand that GBP need to move as well to JPY pair to move. So you have to see USD JPY is moving or not, or you have to see all the correlated JPY pair is moving or not. Like suppose GBP JPY is moving up, Euro JPY is moving down, USD JPY is moving sideways. So what do you think is going to happen? Obviously, the pair you're trading will not going to move much because they have no directional bias yet. So you have to understand from this. So this comes to your edge. This is your experience, that understanding that why GBP JPY moves. So it has to move from two elements when you come with the cross pairs like GBP JPY and so on. So you have to understand this is pretty difficult to trade cross pair than the 6 major pairs. So I would suggest to new traders, you'll be better off trading the big pairs like major pairs, which not like influenced by the other pairs. So that'll be much more stable in if you trade. Suppose the GBP of AUD you trade. That's two elements to a trading. So you either GBP and also GBP is moving one direction, AUD is moving other direction because both of them influenced by the USD pair. So you need to see the US dollar index as well. So this is a few elements you need to look for. These are the edge in your trading. If you don't understand this edge, I, I would suggest you to understand why the pair moves. The pair doesn't move only for, it's a pair, so obviously there's two elements to it. But when it comes to cross pair, there is a three elements already in there. So as you can see, if you go for GBP AUD, so GBP is moving with the USD and AUD is moving out with the USD as well. So they are influenced by the USD pair. So yeah, there is three elements in it. So it must be that's the difficulty in trading cross pairs. So new traders, I would suggest you go for the more stable pairs which just doesn't move as much, as maybe less volatile. Probably that would be the answer. And yeah, that's the other thing. Third thing, it's just adapting new ideas in your trading. Market might move. Market is the way it's moving might not move tomorrow the exact same way. Today may be choppy, and you think that this is the end of the market. Probably not. Tomorrow might be a trending day, and today market is has suppose FOMC or some kind of news coming in, very CPI or something like that. Probably that would be a difficult day to trade for new traders, and some experienced trader probably will be making money from that as well, because they understand how to trade news and stuff. For you, if you don't understand how to trade and you don't have a strategy to trade, so it's better off you like not trading that day or that session, or in within at least a couple of hours in that bracket. This is the one thing. So every day is different. Don't think that today you make money, tomorrow you're gonna come in and crush it. Not gonna happen, because tomorrow is another day, and today is a different day. So every day you have to think that what day is today, and is there any news coming in? Check the news all the time. Check the Twitter. You need to have a news feed as well open, so see anything coming up. Someone is tweeting. If you see anything like volatility in the market, obviously some reason see someone is tweeting or not. Forex Factory is the good site to check all this news and stuff. And so these are the things. So you need to constantly update it yourself, learn the way the market is doing today. If the market is choppy, it's better not to go and fight the market, because market is choppy. You might lose all your capital, or your, like if you're trading the your prop firm. So obviously there is a 5% daily stop loss, or whatever, 4%, whatever it is. You might lose it because you are not following the market. What the market is doing. Market is choppy because there is no directional bias in the market. When there is a news day, usually there will be a pre-market move. Means before the US market opens, there will be a move, because the market makers or the big traders usually make the market beforehand, not like us, that we see the market and then we react. They make the market, so obviously market is moving in that direction. And if you see market is not moving in direction, then you have to understand probably they don't know yet. Suppose NFP days, sometimes they don't know. Usually it's very hard to know, because month basis. But some of the results, they probably have a prediction and they go with the prediction. You get me? So they understand how this market going, and then they go with that. And so these are the things. So you have to understand. You have to be very adaptive to the market, to understand what's the day today, what's going on today, and what's your plan if the market is not doing anything, not trending, or market is in a kind of choppy, kind of rangy market. What's your plan? What are you gonna do? You're gonna trade, or if you trade, what's your plan? So usually ranging days, you'd be better off trading support resistance solely, buy the support, sell resistance. That's the easiest way. Trade your lot size smaller. On volatile day, it's much easier to trade for me, because I understand volatility much more than the range. Range is not predictable. Volatility, you can see that which if you, once you have the direction right, you'll be okay with it. Even if you have a couple of losses, but one big win can actually cover whole losses. And another thing that you need to have as your, as I already told you about the emotions, your emotions, you need to have it always in check. Okay, you need to talk to yourself. How are you feeling that day? Are you feeling like, if you have, suppose you have a couple of losses, and how are you feeling? You talk to yourself. If you have your friends, talk to them that you're feeling that way. I think that will help in one sense, because most traders are like, very solo traders, like retail traders like us, and prop traders or institutional traders probably trading with other people. They have some support. We don't have that, so we have to talk to ourselves that how you feeling that day. I guess feeling, see, if you are not feeling right, if you are tired, you are, you're feeling not confident enough. I'm not saying the confidence is good or good or bad, but if you think that you are not certain about the market, stay away. It's one day. There's heaps of days, 365 days a year, right? How many days the market open? Over 200 days, right? So you have many days to come to trade. So don't think that today is the last day in your trading. Just another day will come, and you will be better off not trading today. So think that way. So you have to keep on talking to yourself. How are you feeling? What's your trading plan? Are you following the trading plan? If you're not following it, how to control your trading place? Just put your computer, stop your what are you doing? Just go walk, go for a walk, like go in the park, do something else. So this way you can control yourself. Just control manually, like stop, just shut your computers completely, not watch videos or anything. Then you might go in, back in. I know, because I've been trading for quite a while, so I know this kind of situation can happen. So you're better off completely shut your computer, go watch TV, not on the computer, just something else. And don't, if you're back in your head, say that just go back, just don't listen. Just listen to your logical side of the brain, not emotions that day, okay? And better off tomorrow, you'll be way better off, 100%. Because next day is a different day, different market conditions, different traders coming in the flow, different institutional players playing. So completely different scenario will be there. Another thing is that you need to, what I understand that my gains, like over this, I told you about the 2 months, I actually made like quite a lot of money. You don't probably believe it, but you probably know that how much it takes for 15% gain in 21 days. And another, that challenge that I lost, I made around like another 21%, because I was already down 4-5%. So I have to get back up to the 10%. So there was like 15% one day and another 4.5%. So almost 21%. So profit can be made in the market, but you need to have not only a plan or a strategy, you need to have an edge. You need to understand what's your edge. If you don't have an edge, I think you're better off looking for an edge in your system. See what you're really good at, what's the part of the market that you understand most, then go for that. Suppose I was listening to, I forgot his name, a veteran trader. He was talking about this, that if where your stop loss, you're supposed to put your stop loss, you should put your entry in there. So that's a good idea actually. So if you think that you put your stop loss there, why can't you enter on that place and put the stop loss bit above that? So if you think the majority players are putting the stop loss in that area of resistance, why can't you be a trader that can trade in that area of resistance or support, that where most people are afraid to enter a trade? You get me? Suppose you are entering a trade with a confirmation, right? Okay, I need this confirmation. Like, I understand what you're saying. That without confirmation, your winning rate will be lower, and you want your winning rate to be really high, because obviously no one wants to lose, right? But the thing is that you have to understand that to get into a market in an area that no one wants to go, and your stop loss, you're putting your stop loss to invalidate your trade ideas. So why can't you enter that spike that market is taking and making the liquidity and so on, whatever you call liquidity or stop loss hunt is the same thing, but I call it stop loss hunt and you call it liquidity, right? But the same concept, someone is selling it, telling it different direction, different word. So I guess if you understand your concept, just a little edge in the market can change your whole trading. Just understand what makes the market move, and if you keep on stopped out for that reason that you think that you are do the opposite. So where you're supposed to put the stop loss, just enter on that, and your stop loss should be above that. So you are way already ahead of other traders. This is the one thing. So you need to have an edge. If you don't have an edge, you need to look for an edge. And without an edge, I think it's really hard to beat the crowd and making 15% gain, 20% gain in month, and to win a trading challenge or all this prop firm challenge, bit hard, other than you have a certain edge in the market. Another thing you have, I'll talk about the trading journal, and I was about to do. I couldn't do the whole lot of my trading because I do usually do intraday trading, so there is quite a lot of trades. I usually take the trades that I lose and journal them more carefully than the winning trades. I know the winning trades are very easy to, because my plan is that I can see it. I can tell straight away that which was I won, because I know that the market went my direction and stuff. But the days or the trades I lose, I try to keep a record on them more carefully than the winning. I also keep the winning, but I'm saying that I would focus on my losing trade. Why did I lose? And what was the problem? And if I have a problem, how to overcome that? So journal helps that. You have to understand that, not talking negatively, like why you lose. Some people don't want to talk about the lose, but I rather wanted to talk about the lose in my head. Why did I lose? And how can I improve my trading if I would have done that? And if I would have done the opposite, what would happen? This kind of thing, you get me? So this is trading journal will help that. And also in months time, you're not going to probably remember all your trades, but trading journal will help you to understand that the days you made the most money, what did you do good? You understand? The day you're doing good, that means that day was something good about the market, or something you're doing good. What was the difference? Like the market was trending, or you're doing bit different things than you're supposed to usually do. So trading journal will help you, but don't only do the journal, also go through the journal after the trades or next day. Another thing I can, I know the video is getting too long, so I think I'll stop in this video in this length, and then if you want more videos, I can make more trading psychology related videos about this. Thank you very much, guys, for watching. Bye.